Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about one stock that I actually purchased last week, as opposed to, for the most part, I think that the move is going to be to continue to switch portfolio concentrations over to high-yielding bonds, as well as to certificate of deposit accounts or money market accounts with various banks, as I continue to see cash perform very well in the immediate future, as opposed to much of the stock market. We are starting to see some deterioration in the market in association with rising interest rates, and something that we would expect to see in Q3 would be deterioration associated with earnings performance from a lot of these companies. In the meantime, one of the companies I'm continuing to look at, which has not seen the same level of deterioration, but definitely down quite a bit from their heights, is ABBV. And ABBV Pharmaceuticals, or ABBV Inc., is in the pharmaceuticals business. Some of their largest drugs is going to be Humira, which is an immunology drug. However, they also have a drug, and I apologize if I am butchering these pronunciations, but Skyrizi and Rinvoq. And both of those are also going to be in the immunology world as well. The reason why I'm looking at ABBV is, aside from the fact that it has continued to hold this 140 level that it's been at, despite some deterioration in September, despite where it was last year, is because for the most part right now, I'm looking at building a portfolio for capital conservation as opposed to necessarily just straight growth right now. I do continue to invest in a 401k account through the company that I work for, and that is continuing to go into an S&P 500 account. That being said, I don't have the capability to touch that for the better part of the next 30 years. So what can I look at this point in time? Well, capital conservation. How can I keep cash? Now, one of the benefits of ABBV is this stellar dividend that you can see right here. So you can see that it is currently $5.64, or right around 4% of the current stock price. I believe that this dividend will continue to be safe, despite the fact that I think we are going to see some deterioration in the overall sales of this company. That being said, if you look at the cash flow associated with the company, they continue to build on that cash position. It continues to look very strong. And in terms of what that looks like on their balance sheet and why I think that dividend is going to continue to be safe, is you can see the cash and short-term investments is still close to $10 billion. So I think that there continues to be the capability for the company to continue to perform very well. One of the benefits right now is if you were to have 100 shares of this stock, which at this point in time is going to run you about $14,000, you are going to get back $564 a year. So that is a very healthy dividend and very attractive when you're seeing stocks continue to decline. If you are running Dividend Reinvestment Program, or DRIP, you're going to see this dividend right here continue to get reinvested back into the company, meaning that you're going to continue to build the position. Now, at this point in time, you have to recognize that it is possible that the stock market could stay stagnant or flat, or we could see this back and forth motion in the 300s from an S&P perspective, and that you aren't going to see real appreciation for as much as 5 to 7 years. That's something that we saw in the 70s. That's something that we saw from a 2009 to 2014 perspective. So I think that there is value in being able to buy, but I also think that there's value in looking at stocks like this, where if you hold, you're continuing to build that position despite the fact that you're not necessarily reinvesting into that program or into that stock. As such, this is one of the areas where, yes, I want to protect my cash, but I think that this is going to be a worthy longer-term investment as they continue to build on some of their immunology drugs, as they continue to invest in neuroscience, and as they continue to hold onto a strong position of capital. Due to the popularity of their drugs, despite the fact I do forecast declining sales, I think that they're going to continue to be able to pay a very comfortable dividend. And if the stock price goes down, then the dividend is going to repurchase more shares of stock at that individual pricing. Now, this is not just me who shares these opinions. Now, keep in mind, I think that a lot of what analysts provide is pretty garbage, but you can see that overall the expectation for the next 12 months is relatively positive, and even on the bear case is not that bad. So the company continues to look very, very strong, and it gives you the capability to continue to have strong dividend performance at the same time when you could see stocks continue to decline. In terms of overall events, they are going to be announcing their ex-dividend in about 2 weeks. So you do have the capability to purchase the shares of stock prior to October 13th to take advantage of this $1.41 dividend that will be paid out on November 15th, about a month later. Now, in between that time, between the ex-dividend date and the pay date, we are going to see those Q3 earnings, going to see that potential deterioration, which could result in a fall in the overall stock price. So you have to recognize that that's the risk that you hold. That being said, the company is continuing to pay a very attractive dividend, with that yield having actually been increased a year ago in October. So there's a lot to like about this stock. You also have to recognize that the overall market is going to continue to be under pressure going forward, whether that's with the expectation of higher rates or whether that's the expectation of declining earnings performance. That being said, for a stock like this, I think that there's a lot of value in having something that has a strong dividend, will continue to build over the next couple of years, and should the stock price appreciate, you'll have more shares of a higher price stock. That being said, I'm just some guy on YouTube, and this should not be viewed as investment advice. This is just what I'm looking to do, and as such is my opinion. If you've got some items that you'd like to share in terms of stocks you're looking at, in particular dividend or what I would call capital conservation stocks, let me know in the comment section down below. Love to learn more. Thanks for watching, and if you've made it this far, please leave a like and subscribe.